What's going on, investors? My name's Emmanuel, and one of my favorite quotes from Benjamin Graham in his book, The Intelligent Investor: stocks do well or poorly in the future because the businesses behind them do well or poorly. Nothing more, nothing less. So with that said, NIO took a bit of a dip on Monday's session, but rebounded quite strongly to near all-time highs on Tuesday's session. And the most popular question I have received in my DMs over the past week, aside from why Workhorse is down, is if I think it's too late to buy NIO stock. And if not, what are my price predictions? Now, if we are to put that Benjamin Graham quote into context and apply it to NIO, perhaps the question isn't if I think it's too late to buy NIO stock right now, and rather it should be, is NIO as a business, A, currently doing well, and B, is it likely to continue to do well in the future? And if the answer is yes, then that should, at least in the long term, reflect in the share price. So with that said, the objectives of this video are: 1. To recap the company profile of NIO and revisit how they generate their revenue. 2. I want us to look at the recent performance of NIO as a business and assess their current financial health. 3. I want to identify the key indicators and also the green flags that suggest NIO will continue to do well in the future. 4. I want to assess exactly how NIO has a strong support from the Chinese leadership. 5. Look at the multiple analyst price predictions and also their forecasts. And lastly, number 6, I want to conclude whether I think NIO will do well, and if so, will I be buying and at what price? So investors, as usual, we have a ton of information that we need to get through in this video. But right before we do jump into the analysis, please don't forget to smash the like button. It lets me know that you enjoy this type of content. Plus, it helps the channel grow. And speaking of which, if you are new to the channel, then hit that subscribe button to stay up to date with more stock analysis content, all the stocks that I buy, sell, and that are on my watch list, as well as any major stock related news. So with that said, stay locked in, watch until the end, and let me know your current position on NIO. Are you already invested? Are you looking to invest? Or you have no interest in investing? So a quick recap of the company profile of NIO Inc. in case this is your first time of hearing of this company. And I must state, all of the information that I provide in this presentation can be found in NIO's most recent annual report, as well as their most recent press releases, which again is located on the investor relations webpage. So to summarize the business, NIO design, jointly manufacture and sell smart connected electric vehicles. They're primarily known for their EV SUV models, and these models are the EC6 models, the ES6 and the ES8 models. Now, NIO also has a super electric car vehicle model, which is called the NIO EP9, and I think is a very decent looking sports car. I mean, I wouldn't mind having that on my drive, I'll be honest. But as well as their cars, NIO is also regarded as one of the drivers of innovation in the next generation technology pertaining to electric vehicles. So for example, they are regarded as one of the market leaders in the innovation of autonomous driving technology, as well as their breakthroughs in artificial intelligence capabilities of modern day electric vehicles. Now, NIO has also spearheaded a battery as a service, which is better known as the BAAS or BAS business model, which I thought when I first covered this company was brilliant. And what that simply entails is a battery leasing service that will allow drivers to buy an EV without owning the battery pack. Because historically, the battery pack is known for being one of the most expensive parts to an electric vehicle. So by essentially selling the cars and then leasing out the batteries, that will automatically lower the starting price of purchasing NIO's cars, which will open up the possibility of ownership to lower income generating families or individuals due to increased affordability. So you're essentially reducing the barrier for entry. Now, in the long run, the leasing of the battery pack might add up over time, and you may end up spending more over a long duration, but in the short term, at least it won't cost you a lot of money to own a NIO car. So I guess it's almost like a false economy. I don't know, but regardless, it's reoccurring revenue for NIO. Alright, so that was a quick overview of the products and the services that NIO provide, as well as their business model and how they generate revenue. And if you do want a more in-depth look at the company, then I highly recommend that you check out my NIO stock analysis video, which I will link in the description below. So definitely check it out if you haven't already. So the current question is, why has NIO suddenly had this massive boom in share price? I mean, year to date, this stock is up over 600%. And just from a monthly time frame, the stock is up over 40%. So there's no question this stock has been on fire. And I mean, you could argue that the whole EV sector has been in a bit of a bubble this year. And you know, you would be partly correct. However, when you look at the likes of Nikola and Helion, you know, they experienced the EV boom, but have since been on a downward spiral. I mean, even Workhorse has for the past month been on a complete downtrend. But NIO, on the other hand, continues to soar, you know, similar to Tesla. So is it the case that NIO as a business has been performing well? Well, let's take a look at their most recent third quarter performance and delivery updates. And straight off the bat, pretty much in your face, they are letting us know that from the get-go that they killed it this quarter. I mean, they posted another monthly and quarterly record with their September deliveries, and it states, NIO delivered 4,708 vehicles in September 2020, which is an increase of 133.2% year over year. I mean, that's phenomenal growth, investors. Absolutely, no doubt about it, they crushed it. So from a 3 months perspective, it says NIO delivered 12,206 vehicles, which represents an increase of 154.3% year over year, which means the total delivery so far in 2020 is NIO delivered 2,375 vehicles, an increase of 113% year over year. I mean, investors, these are absolutely phenomenal numbers. And if you watched my video on Tattooed Chef, the growth of the plant-based food industry, which is also growing at triple-digit rates, I explained that this type of year-on-year growth rate is insane. It's not normal, but it's also a great indicator for further future growth. Now, translate that to the EV sector, and triple-digit growth in monthly sales is also, in my opinion, a further nod towards positive future growth and performance within this industry. Because even if the growth rate slows down to double digits, perhaps maybe due to a rise in competition, for example, but then double-digit growth is still incredibly impressive. So based on these delivery numbers, it's pretty hard to argue the fact that the battery as a service business model is an incredibly effective business model. However, I will stress, NIO still lags behind its closest competitor, which of course is Tesla, because NIO has sold 26,375 vehicles in 2020, and its cumulative sales reached 58,288 vehicles, while Tesla sold 50,000 vehicles in China in the first half of 2020. And that's all thanks to the Model 3, which was August's top delivered EV. And NIO's ES6 wasn't too far behind, sitting in 7th place. And this is all according to the research done by the guys at Clean Technica. So it's clear to see that NIO is still in its early stages and still has a ton of growth potential ahead of it, which again are all green flags for potential investors. It certainly is a green flag for me. And as such, this led to JP Morgan upgrading NIO stock on October the 14th. And the article reads, the shares of NIO jumped 22% on Wednesday after JP Morgan upgraded the company to an overweight rating based on surging demand for electric vehicles in China. The firm also introduced a new June 2021 $40 price target on the stock, and the prior target was $14. So this is really encouraging to see top analysts raising their price targets, because it indicates that they think that the current share price of NIO may currently be undervalued, and they think it's a buy at its current price. So we can clearly see the business is doing extremely well from a fundamental perspective, and also has upgrades from large institutional banks. But let's dive a bit deeper into the company's financials to understand its current financial health. All right, so we are on NIO's most recent balance sheet, and our focus is on the unaudited US dollar. And one of the first things I look for on a balance sheet is their cash versus debt, because I want to know if this company has any debt. And if so, how over leveraged are they? And looking at NIO, They do have a strong cash and cash equivalents position, which is sitting at $1.4 billion versus their long-term debt of only $998 million. So this indicates that NIO currently is in a strong cash position because they do have more cash than they have in debt. Now, it's important to state at this point that the cash NIO has on its balance sheet was as a result of a huge cash injection that it received from strategic partners who pretty much saved this company from going bankrupt earlier this year. So let's take a look at that article so that it all makes sense. And it reads, on June 29th, the company announced that it had received 4.8 billion RMB, which is about $678 million from strategic partners who now own 24.14% of a joint venture into which NIO has contributed its assets. In addition, the EV maker expects to get more money. So for example, 200 million RMB will be invested before September 30. NIO also expects to receive another 2 billion RMB by March 31st, 2021. Therefore, its strategic partners are putting in 7 billion RMB in total for that JV stake. So NIO had to give up a lot of its stake to their strategic JV partners just to stay afloat and survive. Now, that's not really the best sign, if I'm to be honest. Companies do need to do what they have to do in order to survive, and we are seeing more and more companies do this just to stay afloat. I mean, just look at the airline industries, for example. So the fact that NIO got this cash, which further strengthened their balance sheets, we can see this as a good move from the management of this company. And that's my opinion, all right? That's my thoughts on their cash position. But so moving on to their total current assets, it's sitting at $2.1 billion versus their total current liabilities, which is sitting at $1.8 million. And to work out the current ratio, you simply divide the total current assets by the total current liabilities. And NIO has a decent current ratio of 1.16, which a current ratio above 1 is an indicator that the company has enough in the value of their total current assets to cover their financial obligations for the next 12 months. So in my opinion, currently NIO does have a relatively strong balance sheet, which is very, very good and something I want to see before investing in any company. Now, let's take a look at their income statement. And it says that vehicle sales totaled 493 million. And other sales, which I'm sure includes the battery pack leases, etc., amounted to a total revenue of 526 million, which is really, really impressive. However, just take a look at the cost of vehicle sales. And the cost of vehicle sales amounted to $482 million. So the first thing that stands out to me is that they're operating on extremely tight margins. The cost of revenue is almost equal to the total revenue, which reflects on the $44 million gross profit. So pretty much there's not much room left for operations. And as you can see, the R&D cost $77 million alone, and admin totaled 132 million, and all operations combined led to a loss of $164 million just from operation. So that's something, in my opinion, that management definitely need to improve on, because that will drastically improve NIO's bottom line. Okay, so now where do top analysts see NIO stock a year from now? And straight away, it's clear that the overall sentiment is very, very bullish. I mean, you have price targets that range drastically from the lows of $44 a share, which as of time of recording this video would represent a 64% return on your investment. And you've got highs of $269 a share, which is absolutely insane, and that would also represent a 905% return on your investment. So I think if NIO can continue in its current trajectory, then I personally would be conservative and say that my price target would probably range between $50 to $60 a year from now. And that would also represent a rough 75% return on your investment, depending on your average price. With regards to analyst forecasts, they are predicting continued sales growth in Q3 and also in Q4, with double-digit growth rates of up to 17%. And considering the continued expansion of the EV market, along with NIO's continued government support for a bigger push towards EV, it's hard to see how this cannot be achieved and for NIO to also exceed these delivery numbers. Now, on the topic of the Chinese government supporting NIO, I do want to bring to your attention China's main ambition regarding the rollout of electric cars across the nation. And this was from a Reuters article that I found late last year. But here it says China wants new energy vehicle sales in 2025 to be 25% of all car sales. And that will be further incentivized by China via stricter green car quotas, which will require car makers to produce a certain amount of new electric vehicles. Now, 25% of all car sales to be electric within the next 5 years is massive, especially considering Chinese car sales rose at its fastest rate in more than 2 years in 2020, and this is amidst the Rona. The Wall Street Journal reported that retail passenger car sales in China increased by a whopping 8.9% last month from a year earlier to 1.7 million vehicles. And who stands positioned, ready to reap the benefits of this exponential push and also the continued support from the Chinese leadership? NIO. NIO Inc. Because they are one of the best selling Chinese EV cars right now. And investors, I must say that this is extremely exciting to see and almost guarantees NIO's long-term success. Remember, I said almost. Nothing is guaranteed, all right? But this is looking very good for NIO. So with all that we've covered regarding NIO in this video, it's clear to see that the company is doing extremely well. And to be fair, there are not many signs of them slowing down. Yes, there is still a lot of work to be done regarding their financials, especially on the operational side of things, which we have already identified. But in my opinion, as long as the company continues to do well, according to Benjamin Graham's quote that we started this video with, the stock price will also continue to do well in the long term. Plus, analysts across the board are extremely bullish on this company. So from a long-term point of view, NIO is probably still a buy at its current share price. And I must stress, this is as long as the company continues to do well, they continue to grow their vehicle sales and also their revenues. If they can get a grip on their income statements and also continue to beat their delivery numbers, I mean, this is absolutely a buy in my opinion. And those are my thoughts, investors. I will certainly be looking for opportunities to purchase some shares of NIO. And when I do, I will let you know on my Instagram and also on my Twitter. So if you don't follow me on those, the links are in the description below to stay up to date with my movements in the markets. So with all that said, please make sure that you do your own due diligence before you decide to invest in any stock or in any company. I've said it before and I'll say it again, I'm not a financial advisor, so please view my content as purely educational and not investing advice. And if you do want to learn about investing in stocks, there are some useful links in the description below. Plus, I would recommend you get this book, The Intelligent Investor by Benjamin Graham, all right? My broker Trading 212 will also send us free shares if you sign up using the link in the description below. And with all that said, please don't forget to smash the like button if you gain some value from today's content. Hit the subscribe button and the notification bell if you want to see more content from me. Thank you so much for watching and I'll catch you in the next one. Peace.